Welcome back. Well, as I said before, today the MPC will make that decision. The Monetary Policy Committee of the Central Bank will decide how much it will cost you to borrow money from the banks. We'll find out. The last meeting we had a cut. Consensus is we might see another cut. Let's talk to Dumebi Oluwole now, she's the manager of Financial Derivatives Company. Great to have you, Dumebi. Definitely, I'd like to get your expectations here. It almost seems like it's going to be another cut, but any surprises expecting?
I mean, we're not expecting any surprise. Very much like you have said, the consensus is another rate cut, but we do think it's going to be conservative and very cautious, considering that inflation numbers that we have seen, though, with a consecutive downward trend for the past at least 5 months, the base effects or the rebasing exercise is very, very much prominent in how those numbers are looking. And as such, it's extremely important that the MPC is very cautious of that fact. So while they will be reducing, while we do think that they're going to be reducing rates, they will still be very cautious by how much rates are reduced.
All right, so it seems everything is going well on the macro side, seeing what's playing out with inflation. That we see the Naira, that also strengthened yesterday. It's also, been trading within a range, which is below sub 1,500. But what other concerns do you think this MPC will be looking at in this meeting?
Yeah, of course, I think the security situation is one thing that the MPC will definitely consider. Reason being that it does have spillover effects on other aspects of the economy that will eventually, impact prices. Remember that the core responsibility of the central bank is price stability, both on the inflation aspect and on the exchange rate side. And what the security situation means for the exchange rate side, for instance, is reduced investor confidence that could eventually impact capital inflows and then impact, the level of foreign exchange that is circulating within the economy, and of course impacting, the exchange rate in itself on a negative level by increasing, downward currency pressures. And if that is the case, of course the MPC will want to consider the impact of that and how that will definitely affect the macro economy in terms of, imported prices and generally operational expenses for businesses, especially with the fact that we're going into the festive season. So that's on one end for the exchange rate part. On the inflation bit, we have seen that the states that are highly affected by the insecurity situation in Nigeria, which, for instance, has pretty much aggravated in the last couple of weeks at the northern states. And these northern states, are very much Nigeria's food production hotspots. And if food production is reduced from those states, what it means is that inflation across the country, especially in food receiving states, high food consumption states like Lagos, we would definitely see, we most likely would see inflation, spike in the coming weeks or in the coming months. So that's definitely something that I think the MPC will consider, considering the implication and the effect that it has on the broader nation.
Right, and definitely looking at the mandate, for the central bank, and it's mostly price stability and full employment. And you wonder, at this point, when a country gets that tag, as a country of particular concern, and you wonder what tool will the central bank or the MPC have in, creating some kind of buffer for the economy when you have this kind of situation?
I mean, in terms of the tools that they have, forward guidance and signaling, that's pretty much what they have to do anything really to kind of uplift investor and market confidence towards the Nigerian economy. And pretty much in terms of forward guidance, what this looks like is announcing, through the MPC that the central bank is definitely still on its path of orthodoxy and will continue to do what it takes to ensure that prices are stable in the economy. They will also be very transparent in their, data reporting and on how much work the central bank has done so far to ensure that there is enough forex supply, there's substantial forex liquidity, there is monetary discipline across all central bank, disciplines, pretty much as with the commercial banks, mortgage banks, and also ensuring that there's that strong monetary policy transmission mechanism. And in that way, right, they're signaling to investors that Nigeria is still, ready to do business. But the flip side of this is that the inflow of forex that we truly need, which is long and patient capital, will take some time to come in. All of the signaling and all of the forward guidance will just pretty much strengthen FPI inflows, which we have seen more than triple in the last couple of months, at least between 2024 and 2025. So if that is the case, it means that there's still much work that needs to be done. And this is not solely the responsibility of the monetary policy. This now calls for a lot more work, a lot more ground efforts, a lot more grounding with the fiscal authorities. Insecurity, tackling insecurity, ensuring that we have stable FDI inflows, that business owners feel that they're supported and the ease of doing business in Nigeria is strengthened consistently, actually rests solely, well, not solely, but rest more than 50% on the hands of the fiscal authorities. And not until all of the economic agency fiscal authorities move the needle in this regard through transparency, reducing the government's trust deficit between themselves and the people, policy implementation, actual policy implementation, and pretty much just really solving the insecurity problem, we will still see investors really wait and they'll definitely take the waiting stance on Nigerian economy.
All right, let's look at the forex market. Now, we see the Naira actually gain the last session after falling, in three other sessions. What do you think is driving sentiment there?
I will say over the last 2-3 weeks, we have seen a lot of nexus, right? The nexus between the political economy, policy pronouncements, and the core macroeconomy really take effect. From when Trump made the announcement of intervention on Nigeria, in Nigeria, to the increase in the number of kidnappings and insurgencies, and how how we've seen the markets react, especially the FX market. What that tells us is that the markets are definitely paying attention to the Nigerian economy, and they will keep moving, in tandem. The market will keep dancing to the tune of the political economy right now. What we have seen, though, in the last couple of days that has supported the parallel market rate has been, to some extent, stable FX supply. The FX reserves are still strong. Market sentiments, especially coming from the successful Eurobond issuance that was oversubscribed, significantly, at least over 5x. That also, supported the Naira and kept it at the band which we're talking about, between 1,450 and 1,500. And we do expect that trend to continue, just barring any shocks that we would see from the, security situation and political economy.
All right, thanks so much. Maybe we'll all be bracing at this point, investors and analysts, watching out with what this MPC decision is going to be, the last one for this year, the 303rd meeting. Thank you so much, Dumebi Oluwole, the manager with Financial Derivatives Company. Thank you.
Thank you for having me.
All right, we'll take a moment now. When we come back, we drill down on Nigeria's oil and gas industry. Do stay with us.